All right, private equity firms, they're under increasing pressure in order to prove to investors that they can create some value. But how is private equity selling itself, and how do the big investors feel? Are they going to give them more money? Well, joining us now for a deal debate, we have Heather Slavkin, Senior Legal and Policy Advisor for the AFL-CIO Office of Investment and Management, and also Mike Green, Chief Executive, Tenex Capital Management. Good to have you with us. Heather, let's start with you. So how do private equity firms position themselves now when, at least when you look at where the financing is coming from and the possibility of exits, it's a challenge, to say the least?
It's an interesting question, and I actually look at it from the perspective of trying to make the argument of how you're going to create value, and not just value for investors, but value from the perspective of what people around the country are looking at right now. There's a lot of public relations issues going on. People are really focused on job creation. And I think that from the investor perspective and from the perspective of working people, we're looking to invest in companies that are good members of society and that are not just making money, but that are creating jobs and are innovating and doing research and development and creating products that are going to bring us into the 21st century.
All right, Mike Green, the idea being that you want companies that are good corporate citizens, but come on, you got to make some profits along the way. And you've got to do more than just shuffle the portfolio companies. You can't just keep selling them to other private equity shops, right? How do you actually liquefy, how do you monetize an investment now?
Well, again, there's many ways to monetize investments when the public markets are not really at a prime or at a high number. One of the things that's interesting about your question, Pimm, is that we have two constituents of the same person. We have, as our investor base, we have labor unions, and then also we would deal with labor unions in the companies we buy. And I think you have to satisfy both sides of the labor union, preserve jobs and give adequate returns. My view is that if a company is underperforming in the first place, and as you know, we invest in companies that have had some underperformance challenges, you're really saving jobs. And hopefully, if you can improve the company, you're creating jobs. And in that way, you're saving the community. But if you can apply the type of leverage we like, which is operating leverage less than balance sheet leverage, where all the cash is going out to service debt, you can probably achieve both goals of being a good member of the community while giving adequate and good top quartile returns for your private equity investors.
Heather, what about this idea that you can satisfy both the profit motive, because of course pension funds invest in private equity, they invest in various types of vehicles, but also, as you just described, the membership wants to see a return to society. They want to see these jobs. Can those two goals, can they be achieved at the same time?
Absolutely. I talk to union members and to people who are working for labor unions all the time, and I hear from them that when they see a private equity company come in to buy a company where they have members, it's a mixed bag. Sometimes the private equity firm comes in and they look at the workers as partners. These are people that know the business, that are on the floor day to day.
Like what Mike Green is saying,
exactly.
Right? You want to have a partnership. But on the other hand, sometimes unions, they think they get very worried. They get scared when you see private equity move in, or a restructuring firm.
Of course, and I think a lot of that comes from the communication and the reputation of the firm, and also something to remember that I think a lot of the private equity guys may not realize is that the unions actually have their own researchers. They have financial analysts that are looking at the companies, that are looking at the transaction and the way that it's being developed. And if they see a firm that's coming in and they believe that the transaction is not going to be sustainable for the company, then that's going to raise red flags. And the union is going to fight that because they want to make sure that the private equity firm is coming in to optimize the company and not destroy it.
Mike Green, how important is it to communicate that the top-level management and indeed the private equity firms that may be coming into an investment, they're not there just for some short-term gain and to make themselves a lot of money, that they want a real ongoing business?
Well, first it has to be the truth. Okay, so you want to communicate if you really believe that there's an investment opportunity there, and that for the investment opportunity to work, it does take the tripod of the investor, management, and labor. Then you need to lay the terms on the table for everybody to see. There may be some good things for some constituents and some bad things for some constituents. And I think, as Heather said, if there's some things that are going to be some tough medicine for the union leadership to sell to their members in return for a sustainable job with sustainable benefits, it needs to be communicated up front. And if it's something that economically, politically, socially doesn't make sense, the deal won't transact.
But Heather, you notice he said it's got to be the truth.
Absolutely.
I mean, and that's something you don't hear very often, right? I mean, the idea being that it has to be genuine.
Yes.
It can't just be part of a PowerPoint presentation.
Precisely, because the workers are there for the long term. You know, these are people who oftentimes have expertise in an industry, who have lived in the same community, whose parents have worked in the same industry in which they're working, and you can't fool them because they're going to be there 3 years, 5 years from now, and if you told them a lie, they're going to know. And
also, they're in because they know that their jobs depend on it.
Exactly.
So they're willing to give up in the short term, perhaps, when they see long-term gain.
If it's communicated to them up front, and if they understand and they believe that there's going to be long-term gain, I believe that in most circumstances the workers will be able to make those sacrifices in the short term.
I want to thank you both very much. Heather Slavkin joining us from the AFL-CIO Office of Investment, and Mike Green, Tenex Capital. Thank you.